Hello everyone, good afternoon. This is Rishabh this side. Hope I'm audible.
Yes, sir, you are.
Thank you. Um, so we are starting off with financial modeling. Let me introduce myself first. So my name is Rishabh Kale. I have been an analyst all throughout my career. So it's been around 8 years, 8 and 9 years into field of being an equity research analyst. So I worked both in the buy side and the sell side broking houses, uh, both roles. I mean. And I've been covering sectors like pharmaceutical, but specifically in India, pharmaceutical, IT, and automobiles. So working 5 years into Indian markets, so I have an experience of 5 years into Indian markets and 3 years into the global market, where I was working with HSBC Global Fund. I was assisting the fund managers over there. So we were not only investing in India, but also also around the globe in the developed countries, specifically the Western countries. So this was my short span of short introduction rather, and so I have been also a modeling financial modeling tutor for a few MBA colleges in Mumbai. So if you guys are from Mumbai, you must be knowing Wellinger Institute. So I teach financial modeling to MBA students over there. There's also St. Francis Institute, which is in Borivali in Mumbai. There also I teach as a visiting faculty. Um, and currently I'm working with an investment bank which is based in Belgium. So I work as a freelance basis, and I also have my small business where I teach. Sorry, where we do investing, equity advisory rather. So I invest in stock market and we invest in stock market and Indian portfolios for clients. So this was my small introduction. I hope many of you are working, or I'm sorry, many of you are not working, right? Like you have come here for internship and hope to learn, financial modeling from me. So our basically, six to seven sessions will be only about financial modeling, how to make a model, or why to make a model rather, and what are its uses in the investment banking field. So before we start, does anyone has prepared a model? You look on LinkedIn, you see a lot of students make models and post on LinkedIn. Any of you have tried doing it? Or you can just so you can write in the chat box because it won't be possible for everyone to unmute themselves and talk. You can write whatever in the chat box. It will be an interactive session rather than only me speaking every time. Okay. So, have anyone made a model before? Or why does a model is made? Do you have any idea? If you have never made, why is financial model made? Okay. To forecast. Okay. I'm just asking a question that how many of you made or do you know why financial models are made? Rita says to forecast. Okay. Fine. Hang on. Guys, please respond now. So at least say, whatever just write, type something, it can be an interactive session rather than said again, just I don't like only me talking in the class. I also want you to interact.
Hello, sir.
Yes.
Here, Ishwarya Khapre. I did not made a financial model.
It's okay. I'm just saying that you can write in the chat box, So
Yes, yes. No. So you say interactive section. That's why I.
interactive, you can interact on the chat box because it won't be possible to everyone for unmute themselves. So you can interact in the chat box. You see in the chat box, others are writing something. Source of fund application of fund is protected to solve complex problems and it's not like that. It falls to solve complex models. This financial model is basically made as someone has said to value the company. I think Rishabh has said to value the company. So this model, yeah, you forecast it, and what you do after forecasting is that you value the company. See, if you know stock market, there are prices which keeps on changing. So what is the price? Is it the price that you should buy? Is the company overvalued? Is the company undervalued? See, the price that you see on the stock market is not today's price. Okay, it is always an expected price. What will happen in the future? And that price has been, clubbed in today's price. So obviously, when COVID happened, market fall, right? Market fell. So when the market fell, it wasn't that because that day something happened for the company. It was an estimation that after, since there's a lockdown, 1 year there won't be any growth for the company. So on that basis, the market falls. So usually the prices that you see on the stock market is usually a 1 year forward price. And this forward price is usually derived by analyst people who make models, and come up with a value of the company and assume that if the company does as per their analysis, then this is the price to buy the company or this is the price to sell the company, vice versa. So this is the basic thing, a model, why a model is made to value a company. Yeah, to forecast, with forecasting, after forecasting you value. It's not for forecasting, it is basically model is made for valuation purpose. Okay. So if you guys are from commerce, final accounts, we used to tally a balance sheet. Those are from commerce, okay? I'm not talking about those are from non-commerce. In that it was final accounts. You guys remember, we used to tally a balance sheet at the end, and 90% of the people would never used to get that because of some error in the entries. Right? Do you agree? Many of us, at least we don't used to get it the first time. We used to get one side, that is liability side, and then we used to tally the same and use the suspend accounts, right? So see, that was basic, that is only basic which is carried forward into finance. Just the words are different. That is why we feel that it is difficult. And specifically for non-commerce students, now they feel that finance is very difficult. You cannot. You think that we should have done accounts to get into finance, accounting, they talk about accounts, etc., etc. When they talk with commerce students, they talk about debit, credit, double entry system, etc., etc. What all things are this? I'm not getting it. I have seen students having this issue, but here we will talk in very layman terms that even a 10th standard guy can understand what is assets and what are liabilities. So let me ask you, the commerce student specifically, why does an asset and a liability match? Or why does a balance sheet tallies? What is the reason? Why does a balance sheet tallies? Anyone? Anyone? Why does the balance sheet tallies? Commerce guys? Why does the balance sheet tallies?
Sir, because one is sources of funds, the other one is application of funds. So obviously the source has to tally with the applications.
Right. Anyone else? Any different answer? Okay. Accounting system, double entry system, or actual concept. Actual concept. See guys, now those who are replying like double entry system, because of actual concept. So now here this double entry system, it is a confusing word to even to analyze or maybe not to understand for yourself only. What do you mean by double entry system? Each debit has a corresponding credit. Now if you go and tell to your father or maybe someone from a non-commerce background, what will he understand? Can you make him understand? Always when you talk about explaining something to anyone, you should talk in such a simple word that the other understands. You have to know. You don't have to tell that always that you know everything. Since you're from account. Double entry system and all. So this becomes very difficult to tell to someone what it exactly means. even you will get confused while telling. If I want, no, if I ask you, okay, please elaborate what is double entry system. It's very difficult for you to elaborate that. Just Rajdeep said, kept it so simple. First day in our accounting, this liabilities, it is called sources of funds. Right? Liabilities are called sources of funds. Guys, right? You have learned this. Liabilities are also called sources of funds. I will not use this liability as an asset anywhere because this is also a difficult word. I have seen, sir, what is called an asset, why car is an asset, why debt is a liability. All those stuff I have seen. I have been, hearing from students. So why is that? Why is that? So here we will consider this as a layman terms. Sources of funds. I hope everyone can know the meaning of sources of funds. That is source from where you source your funds. And assets are called application of fund. Right? This we have learned 11th standard first day bookkeeping class, the first page of the book. Right? This was the thing written, sources of fund, application of fund. Yeah, this is the first class. Yes. And sources of funds, application of funds. How much guys recollect just all things? Sources of fund, application of funds. Now, since we have been graduate and we have been postgraduate, the problem is that we confuse with saying assets and liabilities, where many of the time you only don't know whether it's an asset or whether it's a liability. Okay. How many of you have made a balance sheet of your own? Anyone? Own balance sheet? Anyone tried making your own balance sheet any time? You have done, okay. What have you written on here? What are your assets? Hari? You have done it, okay. You have done your own balance sheet? How? Your own, I'm not talking about some other company's balance sheet. Your own balance sheet. Have you tried to make your own balance sheet? Have you passed journal entries? Or do you have like something like this? Sources of funds. Achha, what is your source of funds? Those who have made, what is source of funds for you? Manish? Prashant? That? Now, for a salaried employee, usually a salary is a source of funds. Keeps on increasing. Salary and savings is an asset, right? Right. Saving cannot be a source. The one that you get money from that can be a source. Okay. Can I say that your source is your salary? And let's say the salary, if you invest in some assets, and obviously will get some interest or maybe dividends, that is your source of funds again, additional source of funding. Right? Let's over here also try to make our own balance sheet where let us consider that we want to start a business today. Okay, let us consider this. Let us consider that we have to start a business today. So when you say business, okay, let us say which business. Let us consider a business of a grocery shop. Well, let's keep it very simple. Let us say you want to start a business today, or let's say from tomorrow. What are the things you require? What are the things you require to start a business today? Capital, right? Capital. So investment people, you are there, now you are the one, right? Okay. As of now, just today you decide that you should start business. So can I say you require capital? Yeah, cash or capital. So now capital is just money. Okay. Cash, whatever you can say. Now, who will give you money today? Who are the people who will give you money? The bank will not give you at the start, because for bank also, you need to have some kind of collateral. First today, yeah, promoters. Okay, what are the name? Investors. Yeah. So investors, can I say, for in our case, let us say if we are just graduate or just just have graduated from a college, can I say our parents will be the investors, our parent, relatives, family, friends, right? So can I say when your parent gave you the money to run the business, can I say they are the owners of the company then? Can I say they are the owners? If they are giving you the money to start the business, see, you are the owner, okay? You will also put your some money, but can I say majority of the holders will be the parents? Because they are the one who have put the money. You are just the one who is running the company. Okay. So those people who have stake in your company, or let's say who are the owners of your company, are called equity shareholders. Equity shareholders. Now I will write equity share capital. Capital means money. Okay. Capital means money. Always remember this. Capital means money. Let us say, capital. Then what do you require? Once you get capital, what do you require? Now here we will consider that we want to have a shop. Okay, not on rent. We can rent it, but just to keep things simple, we want to purchase a shop. Okay. Let us say your parents gave you, let's say 10 million. Achha, now we will talk in millions. The reason because everything in the financial world is it's been given in millions and billions, thousands, millions and billions. Lakhs and crores are not used very frequently. In India only it is used, that too very few companies. But overall it is millions and billions. If you go to work in an MNC, millions and billions are only used. So we'll talk everything in millions. Okay. This is, so millions have 6 zeros. See, it goes like this. Thousands have 3 zeros. Thousands have 3 zeros. Millions have 6 zeros. And billions have 9 zeros. So it is very simple. US people have done this simple, but we complicated with telling lakhs and crores. They don't talk about lakhs and crores. They talk about thousands, millions, and billions. Okay. We will keep this. And what about trillion then? How many zeros it will have? Thousands 3, million 6, billion 9. And what about trillion? How many zeros? 12. It goes in the 333. Okay. It gets added. 333. Fine. It's very simple to understand. Okay. Now don't complicate it with crores and forget about crores. Now whenever you talk about crore, talk about 10 million. Okay. 10 million is 1 crore. Okay. Now all 6 sessions will talk only about in millions. 6 zeros and this 10. Okay. So let us say your parents has given you 10 million. Now what you will do with this money? What you will do with this money? Now you got 10 million, that is in your account. Now to start your business, what all things is required? What all is required now? Yeah, shop, inventory, GST fund. That is fine. GST number you take after a certain turnover. Yeah, equipment, shop, right? You require shop, equipment, yeah. Why you require technology to run a grocery shop? One computer is enough. We are considering about, see, think and answer. Don't just say whatever you have learned. Every companies have different kind of requirements. I'm just talking about what you require to start a grocery shop. Okay. Don't tell all those things, people and all. Only one people. How many people are there in a grocery shop? Furniture, fixture, equipments, right? A shop. Okay, think and answer. Okay, just don't say whatever you have learned till now. You have to apply it. Don't just apply anywhere. Okay. Now, if when someone gave you, let's say your parents gave you 10 million, obviously they would have not given you in cash. Am I right? They would have given you a check. Right? No one gives you in cash. So now we will consider our bank account statement. Okay. Have everyone seen a bank account statement? We'll maintain a bank account statement. Okay. I hope everyone has seen a bank account statement. What happens? You have seen something like opening balance, opening balance, closing balance, right? Opening balance is the day you start your bank account. And closing balance is whatever is there in your bank account till now, right? Closing balance. Okay. Now this was FY22, so we will start with FY22. The opening balance would be what? First up, when you open your account, can I say it will be 0? First day, you go into bank and open an account. Let us say 0 balance account. Okay. So your opening balance will be 0, because you started a year with 0. Then who gave you the money? Let's say equity holders. I'm just writing, okay, proceeds from. So these are the entries on your bank account. Okay, proceeds from. Right, you see this? If someone gives you money, we will not write the name of the person over here. We will club it and write it. Okay. We will not write numbers like names of specific person. We'll club and write that this is the equity holders has given us 10 million. Okay. See what I'm doing over here. I'm not writing 10 million. See what I'm doing. I'm pressing equal to and linking it over here. What I'm doing, see, pressing equal to and clicking it over here. And press enter. You see, it linked. Right? I'm showing it again. Is equal to, and I link this. Okay. Okay. Now what do you do with this 10 lakh? You buy a shop, or 10 million, sorry. You buy a shop. The shop is an application or a source? Is an application of funds or sources of funds?
Hello, sir.
Right?
Hello, sir.
Yes,
So
yes.
can you repeat the how you amount the link? This is equal to.
Yeah, this is equal to, and just go to the cell where it is. Here. Press enter. Just
Okay.
press equal to and just link it. Okay, so shop is an application, right? See, it is not a source because you have not got money. It is an application. You have applied it, and because shop will have long-term benefits. That is why it is taken into assets. Now I have seen that, sir, why shop is an asset or why car is an asset. Car, though we have spent money, the car is an expense. See, anything which has future benefits are said to be, see, those are expenses. See, buying a shop is an expense because without that shop you cannot run your business, but that shop will have life, some life, 10-15 years. That is why it is have an asset. So you don't take directly all the expenses on your profit and loss. Okay. It is an asset because it has future benefits. Rather than to keep it simple, we'll talk about application of funds. So what I will write it over here, plant, all what, all plant, property. Nowadays you get like this, plant, property and equipment. It is being clubbed. And equipment. So always furniture, equipment, machineries are considered under this head. So how much can I buy? How much money can I buy? What is the max amount that I can buy this plant property and equipments all together? Right, I can buy for 10 million only. I cannot buy more than 10 million. Since you have to run a shop, you cannot use your own money, all money. Let us assume you buy a plant property equipment of 5 million. Okay, this is our assumption. Huh? This is red because I have punched this number. Whatever things you punch on your balance sheet, P&L or cash flows, it should be in red. Now red, it is not coming automatically. I have changed the color. In your file, it will come like this. Okay. What I do, I go and change it because I know that this is what is punched. Punch means what? I have hard coded it. See, I have hard coded over here, but over here in this, it is coming from a link. Always press F2 or function F2 to see. Okay. Right? All the things which are punched should be red. All the things which are linked should be as it is black. Okay, now when I say that you had purchased plant, property, and equipment, obviously you must have paid through cash only. What happened to your bank account? What happened to your bank account? Bank account will reduce. So can I say purchase of? Obviously, you will pay it from bank only, right? Purchase of, let's say, plant PP. I'm just writing short form PP. Now over here it was 5 million. So I will not write directly 5 million over here. What I will do is equal to a negative sign. Equal to a negative sign, and then it comes to 5 million. So see the debit credit on your bank account. So one is added, plus means this has been plus, this has been subtracted. Okay. So what will be the closing balance? When I do this sum, I'm doing this sum for everyone using the formula and summing with it. So make sure now when you sum it, don't again take it from here. Okay, you should take it from one row below, one row above it, not below. I have seen student taking from here only. P39 they do like this. No, you will get this error then. Circular referencing. Okay. What do is sum, go up and then control shift and then close. Okay. So can I say your bank account it is 5 million now? Yeah, all this which are coming from a linkages and formulas, I have linked this. Okay. The closing balance is 5 million. Okay. Now what to do? Now you got your plant, property, equipment. Now what you will do? You got the plant, you got your shop now. Shop, you got your furnitures, you got your shop ready. Now what you do? Inventory. I will buy inventory. Now inventory again an application or a source. Inventory and application or a source. Application or a source because you are not raising money from anywhere. So it's an application. So obviously it will go into this side, application side, and let us talk about inventories. So what is the max amount that you can buy inventories? What is the max amount that you can buy inventories? That is 5 million. Right? So rather, we will not use all the money. Let us say we use it 3 million. Okay. I'm using 3 million as I'm not using all the money. All I will do is purchase of inventory So now what should I do? Should I add or subtract from the bank account? That purchase inventory worth rupees 3 million.
Subtract.
Subtract, right? So what you will do is equal to negative sign, equal to negative, and just click this. Automatically your bank account will decrease. You see? Now cash at bank. Now what I'm doing is equal to, and I am linking the closing balance because this is the cash that is there in my bank account. Now you see what does this balance sheet means over here is that 10 million you have raised. Out of this 10 million, 5 million you have applied in plant property equipment, 3 million you are applied in inventories, and 2 million is lying idle in your bank account. So can I say your assets and liabilities are matching? Your sources and your application, this should always match. Am I right? Right, guys? This should always match. Now, this asset and liability is the basic concept that if your father gave you money, okay, let's say he gave you 1 lakh rupees, won't he ask you for the, won't he ask you what have you done with that money? And do we have a proper answer for that? Right now, even if you give money to someone, let's say your brother or sister, won't you ask them that what is the money used for? When your father gave you 1 lakh and you spent 2 lakh, can this happen? Can this happen? The father gave you 1 lakh and you spent 2 lakh, or you bought, let's say your father gave you money to buy a bike of 1 lakh. You go and buy a 2 lakh rupee bike. You can do that? No, right? You cannot do that.
No.
This is what is account. This is what is account. This is basic thing that we use in our day-to-day life. Just because the words are, jargons are used, you make finance look very difficult. Even the way we are taught in colleges and all, it's become very difficult to understand. This is our day-to-day life. Won't it the same thing? Your father gave you 1 crore rupees. Out of that 1 crore, you purchase a flat of 50 lakhs. It's a plant of 50 lakhs, 3 lakh of inventory, and 2 lakh is lying idle. For this, do you need to know accounts? Do you need to be a CA, or do you need to be an account graduate? A normal person who knows how to use money knows this thing. It's just the words are different. It's called asset, it is called liabilities. That is the reason you guys make this confused. Finance make difficult. But it's so. Is this for this? I have just put it into these 2 things. If I would have asked you, okay, tell me that if your father would have asked you, okay, what you did with your 1 lakh rupees, you would have the same answer. Just it will be in 1 sheet, and I am just putting 2 sheets over here. That is the only difference. You write it on a paper, and I write it on Excel, so you think that it is accounts is something, finance. Just because I'm doing something on Excel, just because you have been taught in that way, you think that it is very difficult. I don't understand what is it. Anyone over here who didn't understand this? Anyone over here who didn't understand how to use their own money? Now, if you don't know to use your own money, then don't blame accounts that accounts or finance is difficult. This every damn individual, even a 10th standard guy, will know this. That how should he spend his money and what is the balance. That's it. Okay. Got it? Now, as the balance sheet is made, now what you will do? The inventories now. You got your plant ready, your shop ready, you got your inventories ready. Now, what will you do? Guys, what will you do now? Start selling it now. See, this was the first day, okay? This was the first day the balance sheet was made. Okay. Now, balance sheet is usually made at the last day. Okay, right? Balance sheet is made at the last day of the financial year. Which financial year we are in now? Which financial year we are in? 22, 23. Not 21, 22. Okay. Our in India financial year starts with April to March. Okay. Now we are in FY23 financial year 22-23. So we don't write 22-23, we write directly 23. So since 23 has not been finished, now we have balance sheet for FY22, right? So FY22 will be which date? As of which date? FY22. If I say financial year 22, which date is this balance sheet? March 31st March 2022. Okay. So this was the balance sheet made on 21st March 2022. Not April, Harita. Okay. Since this was the first day, we will go and sell out these inventories. Now see, now this all this items on the balance sheet, right? Next year, can I say next year, if I say that the plant and property is 6 lakhs, 6 million, does it mean that I have bought properties worth rupees 6 million more next year? Does it mean? And what does it mean? That I have plant of 6 million today, and the next year, let's say equipment of 5 million. Next year, I have equipment worth rupees 6 million. So means that I have purchased equipment worth rupees 6 million. Does it mean that? Or 1 million? The additional purchase is 1 million, right? This is worth. Then let us say you had one car which is of 50 lakhs. You bought one more car of 10 lakhs, 1 million. The total cars you have of 6 million. Does it mean that you have purchased a car worth of 6 million? That balance sheet is what you have today. Okay. As of today, this was from last year. So last year you have 5 million, and this year. So probably can I say you must have purchased 1 million of equipments. So it can be also like this, that can be you would have, let us say purchased 2 million more and sold 1 million. Can happen. Here we don't know. Here if I give you only this number, can I say it would also be like 2 million you purchased and 1 million you sold? Then also it comes 6 lakhs, 6 million. Am I right? Because it is last year of the year, right? Last day of the year. This is also happens. So what happened in the full year, that we have to put into some books. Books, or maybe have to put into a wallet. Now consider your wallet. Okay, this is your wallet of plant, property, equipment. This was inventory. Now inventories we had 3 million we had. Okay. Now I have made a small schedule over here. Schedules are called notes to accounts. Okay. Notes to accounts means what? How is this number derived? This number which has come, okay, 3 million. See, out of this 3 million, if I say I have sold inventories worth rupees 2 million, so what should be my inventories? On the last day of the month of the year, that should be 1 million. Now, how will you account that? Now, it is like we make a small wallet over here. This is all wallet, okay? Wallet means what? Today you start your day with how much rupees in your wallet, how much you spent, and how much someone gave you. That is only what is called this notes to accounts. Again, not a word, okay? Not a difficult word. Notes to account. What are these notes to account? What is schedules and all? It is just an accounting of your things that you have done. Everyone knows how to calculate their money in their wallet. Now, whenever you go out of your house, you see what is the money in your wallet. You can analyze, right? How much you spent, and if someone gave you money, You started, let us say there was 0 rupees in your account, okay, in your wallet. Your father gave you 10,000 rupees. You spent 5,000. How much will be there in your wallet? This. Okay, next day, your father gave you more 5,000. You spent 3,000. What should be in your wallet now? Next day? No, one second, sorry. One second, sorry. Your father gave you, let us say, 6,000 rupees, and you spent 4,000. How much will be there in your wallet next day? $2K? Think can answer. Today, let's say yesterday, there was no money in your account. Your father gave you 10,000. You spent 5,000. Yesterday, let us say it was 5,000 in your account. Next day, the father gave you more 6,000 and you spent 4,000. So what should be in your account? After this 5,000 will get carry forward. This was there in your account, in your wallet, right? Then this was there in your wallet. Your father gave you more 6,000 and you spent 4,000. Right? That's it. This is only what notes to account means. Calculating the amount in your wallet. Calculating the amount in your wallet. In our example, now here the wallet is what? Inventory is a wallet. Every wallet has a different name. So the item, how many items are there in the balance sheet? Every one will have a wallet. For this cash, can I say this was the wallet? You know now how this 2 lakh came from? 2 million, sorry. How this 2 million came from? It wasn't direct, right? No one gave you 2 million directly. How it came? 2 million came from this amount. Opening, whatever added, whatever subtracted, whatever you spent. This was also a bank wallet only. You started your wallet with 0 rupees today. Then someone gave you this. The next year, can I say you will start your day with 2 million? Next year? What will be the opening for next year? 2 million? Right now? Right? This is just wallets. Huh? This is all just wallets. What is there in your wallet and how much you spent and how much is remaining. In our example, in our inventory wallet, what was it? You had 0 inventories at the start of the business. How much you purchased? We told that we purchased 3 million of inventories. Right? Right? And I sold how much? 2 million. What should be closing? I say opening plus purchase minus this. Right? Am I right? Right now, do we need to have, do we need to be an accounts graduate again? Those who.
Hello, sir.
Hello, yeah.
COGS में 2 million कैसे आया?
नहीं वो assumption है. मैंने 3 million के मेरे पास इन्वेंटरीज थे और मैंने 2 million के इन्वेंटरी सेल किए.
Okay.
मैं assumption किया.
Okay.
Yeah, a wallet is prepared and then balance sheet is prepared. Harita, because you need to know now where is it. So how did I prepare cash? I prepared first a statement and then I came to cash. The wallet is first prepared and then this amount is reflected in the balance sheet. Now here, every schedule has different name. You don't talk about purchase. What do you talk about when you add more inventories? When we talk about purchases, right? You purchase more inventory and you sold. Now the sold for inventory, what is it called? Cost of goods sold. What is that? COGS. COGS. Cost of goods sold. Okay, cost. This was the cost. This is not the profit. See, you had 3 million of inventories in your shop. Out of that, 2 million you sold. That is the cost, not the profit. This is not the sales price. This is the cost of the product that you have sold. Okay. So here, what will there be? So what is the total inventories that we have? What is the total inventories that we have currently? Right, 1 million. And where it is coming from? This is coming from this schedule. Coming from this. So what I do is equal to, and I link this. I do equal to, and I link this. Now when I have linked this, make sure you do it black. Others are not replying. I Manish and Rajdeep reply. Marita sometimes. Okay. How much is it? How is this inventory coming from? It is coming from this. Okay. You know what happened when I change this? You see this number also changed. See this? Was the purchase of inventory 1 million or 3 million? Was the inventory purchase of inventory 1 million? Because we have linked this, right? We have linked this number. It also changed. So what is the actual? What should be the actual amount of inventory purchase? $3 million, right? And where is that 3 million? This 3 million is over here. Okay. This 3 million is over here. Not just, yeah, Abhishek said is equal to minus and link this amount. Okay, when you link this amount, see what happens? You get a difference of 2 million. Now, what is this 2 million difference? Why is there a difference? Box, yeah, COGS. So, can I say when you purchase inventories, there's a cash outflow. When you sell inventories, do you get cash or do you pay cash? Let's say we are not talking about profit over here, we are just talking about the one that you have sold. You have sold inventories worth rupees 2 million. You get cash inflow. So what should be there on your bank account? Inventory sold. What was it? Is equal to what should I link? 2 million. Okay, this amount should I link? Now the balance sheet will tally. Okay. Fine. What does it state now? What does the balance sheet state now? Out of the 10 million given to you by your parents, 5 million you purchase property, 1 million is inventories are lying, and 4 million is lying idle in your bank account. So you know this that this 10 million is used in this way. 5 and 6 million are stuck up in your inventories, and 4 million is there in your bank account statement, the balance sheet tallies. Now this is one part of modeling over here where I change any numbers over here. Let us say I do this 10. Though it is negative, let me do it 9. See, my balance sheet will still tally. Whatever, see, whenever I put any random numbers. See, anywhere, the red numbers I change, whatever numbers I put, my balance sheet will still tally. You see? See, whatever number I put, balance sheet is still tallying. This is a part of linkages. These are called linkages, which should be perfect. See, here I only need to change the numbers which are in red. I cannot change this number directly. If I change this number, my full balance sheet will delink. My model will delink. Okay, this is called linkages. If your linkages are proper, your balance sheet will tally. It means that you know your concept very well. Okay.
So one thing.
Sorry.
Sir, the difference is there a difference between cost of goods sold and the sales value?
Yeah,
Like,
so this is the cost that you have sold. This is the cost. See, let us say you have a grocery. Okay. So the grocery, let us say purchases of your biscuits, maybe dal, rice, or wafers. Now, all those you have purchased for 3 million. Okay.
yes,
Now, out of the 3 million, that is the goods that you have. Okay. Out
yes,
of
sir.
the 3 million, 2 million you have sold. Means what? Can I say this was your cost? 3 million was your cost.
Yes, yes,
And out of that cost, how much you have sold?
2
You have
lakhs,
sold 2
2
million,
million.
right? So
Uh,
means you have sold 2 million worth of goods.
yes, sir.
Now, obviously, you will sell it at a profit.
Obviously,
Right now, you will not sell at the same price. This is the
Hmm.
cost.
Hmm.
Now we'll go to when we sell at a profit. Now we'll go to the P&L statement of thinking and how much is the sales that we have done. Okay.
Yes, sir.
This is cost of goods, not the sales price.
Sales price.
No, not the sales price. This is the cost.
So then one thing, like you have done in the right side, that is bank account, yes, bank account statement, and in the inventory sold part, we have taken the 2 lakhs, 2 millions.
2 million.
That means the bank account will reflect with the profit amount will also be included, no?
Yeah. So we have not taken the profit. Now, as of now, I'm saying that you sold at the same price.
Acha, acha, acha. Okay, okay,
Okay.
sir.
Okay.
Okay, sir.
We'll take profit and then come over here. Right.
Yes, sir.
As
So,
of
sir,
now,
sir, one more question. Suppose if anybody wants to make a balance sheet, then first of all, we have to make all these inventory. First, we will prepare the notes to accounts, no?
right, right.
Then we'll link it with the balance sheet.
Yeah, that is not because from notes to account you can only play cricket because balance sheet is made at the last day. So you need to know that what have you done for the entire year. And what is that?
Sir, in practical world, suppose a like a big company, MNC or a say listed company, whenever it publishes its accounts, annual accounts, then like how do they prepare those big annual accounts? Like all every 3 months they have to in every 3 months they have to prepare these notes to accounts.
Yeah, yeah,
Like
so they do it now. That is why CAs are there. That financial guys don't have to do that. CAs or maybe the accounting guys do that.
acha, acha, acha.
Yeah, they are prepared. They don't force that. It doesn't mean that they have not prepared it. They prepare on the back end. They don't tell us.
Acha, 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 acha.
You will get it. If you see an annual report, you get this. You don't get in the quarterly report, but you get in the annual report.
No, 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 yes, sir, yes, sir.
Okay.
Hmm.
That they
Okay.
prepare, yeah. Even if they don't show you, that is when then only it is prepared. No? Then only you can prepare a balance sheet.
Yes, yes, yes. Thank you.
हेलो सर
Yes.
इफ हमको अगर बैलेंस शीट बनाना होगा तो हमको इन्वेंटरी शेड्यूल एंड बैंक स्टेटमेंट ये दोनों भी बनाना होगा क्या?
तब schedule से ही balance sheet बनेगा तुम्हारा.
ओके, तो बैंक अकाउंट का जो आपने एंट्रीज किया है
हम्म,
वो भी करना पड़ेगा क्या?
हाँ.
ओके.
Okay. So now this 2 million you have sold. See, this is like example you have purchased 3 cars of 1 million, 10 million each, and out of that you have sold 2 cars. So can I say you have the cost is 2 million, right? Now here we have just assumed that we have sold for no profit. Now just obviously we'll sell it at a profit. Just take that profit over here. I have prepared a P&L account. Let us assume that this 2 million that you sold, this 2 million cars, or like 2 million of inventories, you sold at 5 million. What I'm saying, this 2 million of inventory I have sold for 5 million. For selling this 5 million, can I say 2 million was my cost? What was the cost then over here? What was the cost? No, it was 2 million, not 3 million. Okay. It was how much? It was 2 million. This now it is accounting principles over here. See, though the cash outflow was 3 million, but you only spent 2 million. Means you have only taken a cost of 2 million. Now why? See, when let us say you are open a showroom and you have 3 cars, okay? There are 10 million, each car is of 10 million. Okay, example. Each car is of 10 million, and you have sold, you have 1 car, 3 cars of it, okay? And out of this 3 cars, you have sold 2 cars. Right? So what is the cost? Each car is of 1 million, 10 million. What will be the cost? So we'll take 1 million, sorry. We'll take one. Each is of 1 million. You have purchased cars, 3 cars. So that is 3 million cars you have purchased. If you sold 2 cars out of it, and you sold that 2 cars for 5 million. So what cost will you take? Will you take 3 million as the cost or 2 million as the cost? You have sold this 2 cars only, sales price. Sales price of the 2 cars, sales price of 2 cars, okay? Plus 5 million. So you cannot say it was 3 million, okay? It is 2 million only. 1 second. Okay. So this for selling this materials worth of 2 million, you have sold as 2 million worth materials for 5 million. So here your cost was 2 million. The cost was 2 million. So how much profit you made? What is the profit that you made? 3 million?
3 million.
Right? 5 minus 2. You know, whenever I do any calculations, you see, I have bold this number. You see, even this is bold. This is bold. Even this is bold. And why I do this? Because this is a format of financial model that you need to know that these are the numbers which are calculated. So always the calculate amount to be bold. Here also. It's not coming directly.
So,
Yes.
सर आई हैव अ डाउट इफ हम किसी कंपनी का बैलेंस शीट बना रहे हैं तो तभी भी हमको इन्वेंटरी शेड्यूल एंड बैंक स्टेटमेंट दोनों भी बना के ही फिर वो बनाना है क्या बैलेंस शीट?
हाँ, अभी तुमने वही तो पूछा तुमने.
नो इफ हम रियल में हम ये कर रहे हैं अप्लाई कर रहे हैं बना रहे हैं बैलेंस शीट किसी कंपनी का तभी यही फॉलो करना है क्या?
हाँ.
ओके.
Okay. So, now gross margin. Yeah, COGS actually includes all parts. I mean, this the cost is include all your manufacturing. You know. So now since we are only talking about your grocery store, so that is the only cost for us. But let's say if you talk about some, let's say a manufacturing plant. Let's say if you're building a scooter or a bike. Now for that the plant expenses, the plant electricity, you know, the factory labor cost, all is included in the cost. Okay, all those things which are related to bring the material to make that car. Okay, make that car or make that product is all included in the cost of goods sold. As I have said over here, majorly it's the raw material cost. If you look for a car industry, then the major cost is what? Can I say steel is the major cost to make a car? And if I talk about a car company, it is the major cost. Right, so this is the cost which is usually the raw material cost and all the costs which are related to bring that product on to sale. Okay. Now gross margins. Now what is gross margins? Is that how much profit you made on the sales. If you have done a sales of 5 million and you have done a profit of 3 million. So what is the profit that you make? How much percentage profit? I said 3 million means like you scored 3 out of 5. How much percent you score? You scored 3 out of 5.
60.
Yeah, 3 divided by 5. In your file, it will come like this. So here you have to not multiply by 100. What usually you do, you multiply by 100, right, to find percentage. Here you can use the percentage symbol to get it percentage on your Excel. Okay, so this means that you had made a 60% profit on your sales. If profit is 60%, then what is the cost? If profit is 60%, what is the cost? Percentage. How much percent is the cost? 40. Right? How do I do it? Is cost as a percentage of sale. 2 by 5. So 40% is your cost. So can I say next year, if I assume that my cost is similar, okay, I assume that next year also my cost is 40%. Variable, this is variable cost. And if I say that I have done a sales of 10 million next year, so what should be my cost next year? What will be my cost next year? Right, 4 million, right?
4
I
million.
can directly calculate my cost. Every time I don't have to make this schedule, I can directly calculate my cost. If once I know that, I make the cost is usually 40% of my sales. So next year, I just have to calculate my sales and I will understand that this is my cost. This is the materials that I will be required to sell. Okay. Fine. 40, 40. Okay, what if I say that my cost decreased to 35%? Then what will be my cost? I'm assuming that next year my cost will reduce by 30 to 35%. Only my cost
3.5.
3.5 million. Fine. This is how you start forecasting. Okay, this is just I'm talking how it is made. We are more interested in forecasting the numbers. Let us assume you keep an employee in your shop. Let's say you pay him, let us say 100,000, or let us say 100,000 you pay. See, 100,000 is 1 lakh. I will talk about thousands. I will not talk about lakhs. 100,000 is what I pay. And other expenses usually your electricity expenses, your stationery expenses, your traveling expenses, your auditor's fees, all those what is related to do your business. Okay, all the items which are all the expenses which are there to do your business. Majorly it is the electricity expense and the traveling expense. These are usually the major costs. Let us say I say that it is 200,000. I say that it is 200,000. Okay. So what will be my operating profit? What will be my profit? What is the total profit that I earned?
2.7.
3 million, that is 30. 3 million minus 1 minus 2. 27 million is the profit that I earned. Right? See, again, I am calculating, so it is bold. I am calculating, so it is bold. Now, depreciation will come on to this later on. Okay, depreciation as of now, I am keeping it 0. Now, what is this EBT? So, what is EBITDA? You know what is EBITDA? EBITDA is also called
Earning before tax.
earnings before
Earning before interest, tax,
Interest, tax.
depreciation, and amortization.
earnings before. So EB means E for earnings, B for before, I for
Interest and tax,
T
depreciation, and
for tax,
amortization.
D for tax, and D and A for depreciation and amortization. Depreciation and amortization. Now from this, you subtracted what? You subtracted depreciation. So what is remaining is EBIT. Now EBIT is what? Earnings before interest and tax. Now you have subtracted depreciation. You subtract depreciation from this. So since it is 0, it will be same. But link and keep it. Interest also will come on later on. So put interest 0 as of now. Other income also 0. What means EBT? Now EBT means what? I have taken out interest. So it will be EBT is earning before have taken out interest. What is remaining is earnings before tax. Okay. EBT 20 plus interest 2.7 million minus this. So it will be plus other income, so it is addition. Yeah, there are two things. EBIT can also be said as operating profit. In some industries, EBITDA is taken as operating profit. We'll come on to this later on. Yeah, but as of now, for a standalone purpose, EBIT is the operating profit. If you want to find the operating profit for any company, it is EBIT. Okay. EBITDA, I will let you know that why it is called, why in some industries EBITDA is used and some industry EBIT is used. Okay. But ideally, operating depreciation is also an operating expenses. So this should be your operating profit.
So can you just explain the amortization part? This amortization.
We'll come on to this later on. Depreciation, amortization will come on to later on. Okay. We'll talk about when we talk. We'll talk here in one part. Okay. Okay. Now tax. Tax. Let us say in India it is 30%. Now what I'm doing over here. So 30% of this is how much? On what you will charge 30%? Which amount you will charge 30%? On the sales or some other amount? Yeah, it will be 30% on EBIT. Okay, it will be 30% on the earnings before tax. Now I know, see, I can do like this also. I can do this into 30%. I can do like this, but rather what will I prefer is, I don't want to punch anything. You see over here, I have not punched anything. Apart from the things which are in red, everything is coming from a link or a calculation. You see? So I usually avoid punching, writing anything, any numbers. Whatever I write, I will make sure that it is in red, because I know that this is my assumption. Here also, what I will do is I will take a tax percentage down, create a row over here. I take a tax percentage down. It will be 2.7 into 30%. Now what happens if doing both is right, but this is more interactive. If I want to change the numbers, I can directly change it over here. You see? I can directly change the numbers over here. So what happens? This number changes automatically. Fine. So it becomes very easy for me to change my assumptions when I talk about future. When we make future balance sheet, this helps. Okay. This helps to know that, oh, this is the tax rate, and you can see exactly that what is the tax rate. So if I do this like this directly, the one who is seeing your model will not be able to know what is the tax rate. Right? From over here, can you see what is the tax rate? You know it is 30%, but still you cannot see. What if it was 25%? Right? So I would rather prefer doing this into this. Every time I do this same thing, okay? So I can change this. All we have PAT will be earnings before tax minus the tax, and I get it is profit after tax. Profit after tax. Now it is also called net income. Okay, don't get confused, sir. What is net income? It's also used called net income. Sales are also called revenues. Okay, don't get confused, sir. Revenue, इधर तो revenue दिया है, sales दिया ही नहीं है. Sales and revenue are one and the same, are used interchangeably. PAT and net income are also used interchangeably. Okay, now when you have done this, let us say you have done all this on cash. Okay, we are assuming that all this has happened on cash. So can I say 5 lakh would have come into a bank, 5 million would have come into a bank account? 2 million is what we paid. 100,000 I paid to employees. 200,000 I paid to other expenses. 810,000 I paid in taxes. So can I say this is the cash that is available with me in my bank account? Can I say? Right? Can I say this? This is the cash that is available in my bank account. Right? So what I will do is, see, I will not write each entry, okay? Because this is an indirect method of reporting. You don't have to write each and every entry. What you write the net amount in the bank account, okay? So what I will do, I will not write it, I will link it in the cash flow statement. That is equal to, what is it? Inflow, outflow? Yeah, inflow, right? So it will get added. It gets added over here. Okay. Inflow. But when you do this, you see there's a difference in the balance sheet now. You see the difference is in the balance sheet. Why is there a difference? Why is there a difference? Anyone?
We need to include profit after tax
Where? The balance sheet.
in equity share capital side.
Now, why it should be done over here? So can I say that PAT, does this profit belongs to the company or the shareholders? Does this profit belong to the company or the shareholders?
Company.
No. See, company doesn't belong to the company. No. Who is given money to the company? The shareholders. This profit belongs to the shareholders. It doesn't belong to the company. Tomorrow, if the company dissolves, shareholders will benefit. Shareholders will get the money. And can I say why it is a liability? Can I say it's a source of fund for the company? Can I say it's a source of funds? It is also cash that company received. Can I say it is also a source? Right? From here also company can, this is the cash that company has now. So this is also a source of funds for the company. How it is? By operating, by doing operations, company has sourced this funds. So in the source of funds, usually now in commerce we have learned it is called reserves and surpluses. But now practically it is, you don't call reserves and surplus. Here you talk about other equity. Nowadays it is termed as other equity. Means what? Other equity means this is the equity which has not been raised, but this is the equity which has been, earned by the company by doing its business. Okay. This is the profit that the company has earned by doing business. Okay. And then what you do is link it to the. Okay. When I do this, make sure you add it over here. Tally balance sheet. Now this is the total source of funds that the company has, and this is what the company has applied. Okay. 11.8 million is what the company has sourced, and it is applied of 5 million in property, 1 million in inventories, and 5.8 million is their lying idle in the bank account. You see now it is telling. Here the point of doing all this stuff, this was very basic stuff, but the problem is that no one teaches you this way. Everyone, if I would have started with directly a balance sheet, see, this is a balance sheet for a company. If I would have started directly with this many numbers, you guys have gone crazy here. Some of you must be able to know, but many of you will not be able to know what is going on. If I start directly with P&L, there are so many items on P&L. So many items on balance sheet. Intangible, loans, etc., etc., etc. You see, in cash flows also you will see so many items. If I start directly working on this, won't you go mad? Won't you get mad? Was this easy to understand, or will this be easy to understand? This is easy. The basic part. Now you know where are the linkages coming from. This is easy or no? You start teaching directly on the balance sheet, you'll go mad. In this only you have so many questions. Then just imagine how many questions you will have when I start with doing this. This is the basic which has not been taught anywhere. Everyone starts financial model directly, take a company and start. So how you, if you don't know the basic, how will you start it? And even if you know the basic, the problem is how it is linked. How has this been made? When they have made this starting, this is the only process that they have followed. Then this came because it is over the years. This company is there from last so many years. That is why now all these items have changed. But when it started, this is how it was started. This is how the first year would have been look like. Okay. Now since we have done this, now you got the interlinkages between cost, balance sheet, P&L and cash flows. Can I tell if I change this amount to 2.5 million? If I change this amount to 2.5 million, what all things will change? What all things will change on the balance sheet, P&L and cash flows? Can you tell me? If I change the cost of the goods that was sold, what all things can change? Inventory amount will change first up. The balance sheet will change. Then your gross profit will change. So can I say with gross profit, your net income will change? And with net income, your reserves will change. And with reserves, your cash flow will also change. Am I right? If I do this, no, everything changed. This change, this change, this change. But see, my balance sheet will still tally. You know how the balance sheet, P&L and cash flows are linked to each other. This is how it has been linked. Now, if you know to make this is only what is called modeling. Financial modeling, the basic part is this only. How to model it, how to link it. If you know the linkages, you play anything, do anything with the assumptions. The balance sheet will still tally. Means here you know that you have done your concepts right. Means your concepts are perfect over here. See, I do this. Okay, if I change sales, if I change the sales number to let's say 15 million, what will change? What will change? If I change sales to 15 million, then what will change? That will change. And on the balance sheet, what will change? The other equities. And for the second impact? Cash, right? P&L changed, balance sheet changed, cash changed. So cash changed because of the cash flow statement. Now this bank account statement, I just write this as cash flow statement. In your words, finance word, what? Cash flow statement. Now I have seen many guys saying, many students saying that cash flow statement is very difficult. From today onwards, if you say that cash flow statement is difficult, then I have a doubt that how do you manage your own money? Right? This is what managing our own money. Who paid us? Whom do we pay? Or whom do we paid this money? Right? This is what is cash flow statement. That's it. How much you got? How much you paid? I hope everyone knows how to manage their own bank account. Got it? Easy? Easy. Like we has made, inventory schedule for this. We have made inventory schedule. We also need to make schedules for each of the items. So plant and property we will make later on. Equity and plant and all will make later on. Now we'll make for other equity. Okay. Now other equity, this is okay. For first year it came from this year. But what about next year? The balance sheet is an accumulated number. Okay. It is not a number on a specific date. On a specific year. It is what is coming from last year. So what I will do is I will make a other equity schedule. Again, notes. Acha, what you pay from profits to the shareholders? What do you pay?
Dividend.
So dividend is also paid from this amount only. So here, can I say dividend should be subtracted from this amount? So what I will do is I will again make a schedule for other equity. Under this, I'll make a schedule for other equity. Now again, same thing. Opening, addition, subtraction. That's it. How much was added in that wallet and how much was subtracted. And then closing. So opening, since it was your first year, so this is the other equity, means the profit that you have earned. Am I right? Other equity is what? The returns and surplus. And how much profit you have earned till now. Can I say opening was 0, it was first year. How much you earned this year? The profit for the year, what you add? Profit for the year. What is the profit that you earned? What is the profit that you earned? What is the profit that you earned for the year? It will be equal to the PAT. So I will not write it. What I will do is I press equal to and I link it. 8.5 million. And now what you subtract? Now you subtract dividends from it. Okay. You subtract dividends from this. Now what is dividend? Now how will you find dividend amount? Now, do you know what is dividend payout ratio? You know, if I say the dividend payout is 10%, you know what does it mean?
The ratio to the face value of shares, the dividend paid to the ratio to the face value of shares.
Face value, not face value, that is a different. They usually calculate on that amount, but dividend payout ratio, it is same like your interest. Let us say if you have taken a debt loan of 100,000, taken a loan of 100,000. Taken a loan of 100,000 and the interest rate is 10%. So how much interest you pay? What will be your interest expense? And what will be your interest expense? If I pay, if I have a loan of 100,000 and I pay interest, it's 10%. 10,000, sorry. Now if I ask you the other way around, that if interest expense is 10,000 and the loan is 100,000, what is the interest rate?
10%.
How did you calculate?
10,000 by 1 lakh.
1 lakh
Into 100.
by 1 lakh, 100,000. Same way over here, now interest is paid on loan. Dividends is paid on profits. Now if I say that I have a dividend payout of 10%, means what? Whatever profit I earn, out of that I pay 10%. So the total profit is how much over here?
8.5. million.
Is 8.5. And how much interest? So like interest, like dividend. How much interest? How much dividend I pay? 10%. So can I say this is the amount that I pay? Yeah, DPS divided by EPS. That is your dividend payout ratio. That is your profit into percentage. If I give you dividend payout is what? Your profit divided by your dividends divided by profit. And profit for the year, not the accumulated profit for the year. This is your formula for dividend payout. Same like interest, you talk just about dividends, and dividends is paid on the profit. Dividend is paid on profits, like interest is paid on loans. So what will be there in my wallet now? What will be there in my other equity wallet now?
Balance.
How much is it? Can I say this is zero? Okay, this also you have to calculate. Okay, because opening next year you will start with this amount only. So in the wallet, you start your wallet with zero today. Then you added how much? 8.5 you added, and then you paid 8.5 to the shareholder.
Shareholders.
So you get closing is 7686 as the closing. Now where will this closing reflect?
Balance sheet.
This closing will reflect on the balance sheet now, because now what is this? These are all wallets, and you need to know what is the closing amount of all your wallets. These are all your wallets. We have created 1, 2, and third schedule we have created. You should not link it directly from over here. You should link it directly from over here. Okay. Fine.
Yes.
Just a moment. Sorry. Right? You link it over here. Now see guys, you see a difference over here now. What is this? Balance sheet is not telling. The balance sheet is not telling over here. What might be the reason?
Dividend.
Yes, this is the dividend amount. Same amount. What was it? So dividends paid means what? What happens when you pay dividend?
Cash will go and dividend we need to.
Cash will reduce, right? The cash outflow when you go to your bank account statement and make sure. See, all the things that you pay or you buy, cash changes hand every time. Dividends paid. Dividends paid. Now inflow, outflow, right? So is equal to
Minus.
a negative sign, and then link this. Decreased, your bank account decreased, and then your cash balance decreased. Now, if I have calculated this, dividends payout as a percentage. Now, even if I change sales, this amount will change. Do you agree? If I
Yes.
sales amount, it was 15. Sorry, let us do it 10. We assumed it 5 years, right? First of all, see over here. Now this was our. See, everything changed. Now the dividend reduced because why? Because we have calculated on the profit, and profit declined because we reduced our sales amount. Got it, guys? What are the linkages? Any doubts before we proceed to another schedule? Any doubts? See, all the schedules will have addition, subtraction, addition, subtraction. That's it. Only the words are different. For year addition, it is called profit for the year. Subtraction is called dividends. In inventory, it is called purchases. Cost of goods sold. In asset, it will be called something different. In equity, it is called something different. Let us make this equity share capital schedule. Sorry. So what all things changed? 10 million, 1.3 is what you raised from your sourcing, you source from your operations. Inventory is 5. The inventory I changed, no? I just do 2 million over there. You know how the thing is, see my balance sheet is telling, I'm just changing the assumptions. It will not impact my because everything changes coming through this cash flow. And this cash flow is all linked. Cash flow is all linked. Any change, it will lead to change in your balance sheet. Now let us make your equity share capital schedule. There 2, 1, 2, 3 done. Let us make this. Same will be same like your other schedules. You can just copy paste this. I just copy this and paste it. Here, what I will write now, it is we are making equity share capital. Equity share capital. Now over here, what we say opening is 0. Now for addition, it is called equity raised, and for subtraction it is buyback. These are the only words that are used. Like how we use for debt, addition, borrowings and repayment. For equity share capital we use raised and buyback. Same way for debt. If I talk about debt, it is called borrowings, additional borrowings, and then subtraction is called repayment. Fine. Now, equity raise was, so you don't know what is buyback. You know, when you repay loans, when you take a loan, can I say equity is also a type of loan that you have taken? Can I say this? Maulik, can I say that equity is also a loan that you have taken? And let us say you and your father is running a company, and let's say I am a shareholder in that company. Okay. When let us say you and your father own, let's say 40%, and I own 20% in your company. Okay. Hypothetical situation. Now see, obviously you will not like an outsider to be in your company. Am I right?
Yes.
All right, you will not like an outsider to be in your company. Now I have given you the money, that is why you have given me this. Right. Now like repayment of loans, you can also repay the equity. Means what? You will tell me, Rishabh sir, take your money and give us our share back.
Acha, okay.
Or you can. So now obviously loan, you know that what is the amount to be repaid. In equity, you don't know the amount. It depends actually on the what is the value of the company at that time. So you need to pay me that amount, and I will give you this 20% stake. So what happens when I give you this 20% stake? 20% stake goes off, and now you guys become 50-50 owner of the company. That is like buyback of your own shares. Okay, this is buybacking. Same like repayment for debt. It is repayment for your equity shareholders. Okay.
Okay.
So what does buyback usually increases the existing ownership of the company. Okay. So 0, opening was 0. We raised, how much we raised? We raised 10 million, right? We raised 10 million. Now this 10 million, I'm writing it over here. Since I have punched, it should be in red. See, over here I have not punched. This is coming from a link. This is coming from a link. This was punched. See, this was punched. That is why it is in red. Everything you see in red are punched. Rest all is coming from a link. A 0 is also punched, but next year it will come from a link. You can also put 0 as red if you want. But this is all. If you punch anything on the balance sheet anywhere, it should be in red. Okay. First basic principle of modeling. If you don't put it red in such a big model, you will forget, that where the numbers are coming from. Okay, raise. We didn't buy back anything. Again 0, and then opening plus raise minus buyback. Now this is the closing balance of your equity share capital. Now where will this reflect? This will reflect in your balance sheet over here. Will reflect in your balance sheet over here. Now in this, I have linked purchase of equity holders from over here. See, next year, if let us say the equity becomes 1.2 million, okay, example. Or it becomes 12 million, sorry. So does it mean that I have raised 12 million more next year? Does it mean that I have raised 12 million more? Now, only 2 million, right? Because it is an accumulated numbers. Still last year you had equity of 10 million. This year it is 12 million. So you cannot, ideally, can I say you would have purchased 3, or can I say you would have raised 3 and buy back 1? That also counts to 12. You must have raised 3 million and paid off buy back 1 million. That will also have counted to 12 million. So rather than linking this, okay, rather than linking this from the balance sheet, you link it from your schedules. Nothing should be linked from the balance sheet. Though we have linked this because it's an assumption, but we will change this. So first we change our linkages. What we do is equal to 10 million. It will not change anything, but rather link it from over here. Because what if I say that I have buyback 5 million of this. Now what is it? 5 million cash inflow, outflow. I have buyback, means from a company perspective, I have repaid to the equity shareholders. So repayment is a cash inflow or an outflow? Outflow, right? So here I will add one more item over here stating that buyback of shares. Okay. Buyback of equity share. Inflow, so outflow, so is equal to negative sign and then this. Okay. Link this. See, that is tallying now. Okay, and balance sheet tallying. The same way if it goes for equity, same way it will go for debt. Debt we'll talk later on because the interest expense also comes into this. Okay. Over here, all items done. You got what is it? How it is linked? How all things are linked to each other. Now, can you guys prepare this? I give you some numbers. Can you guys try doing it? Till our next class.
Hello.
Yes.
Actually, I had a question about buyback. So let's say that we have not, one thing I want to clarify, raised capital is from the existing shareholders, right?
Right.
So let's say if we are not raising capital from shareholders and then we are buying back shares from the existing, let's say from the profit or the retained earnings that we have. In that case scenario, how will be the addition done?
No, so this will be there. See, some equity will be there. No?
Yes. So this raised equity is basically our initial equity capital. Is that it?
Right. Initial that you have, no, initial and even what you have raised in the future years, if you have raised something, the past year, sorry. The past year if you have raised, that will all contribute over here. You will have equity share capital. See, it cannot go to zero, no?
Yeah, that's fine. So that means basically that is for the all the outstanding shares that we talk about. That is for the. Okay, fine. Thank you.
Okay. So can you do? I will just give you one homework, small homework. Let us say today is what? Today is 29th October. This Friday. I give you some numbers. You try to. This looks easy, okay, but it is not. When you try to do it, it becomes difficult. Since I do it every day, I know it looks easy for me. It will look easy for you as well. But when you do it on your own, you might get confused. So what I'm doing is I'm giving you some numbers. Okay. You try to make it on a fresh Excel. Don't use this file. I'll show you this file, but don't use this file because if you use this file, then it will be you won't learn anything. It will automatically tally because all linkages are over here. Take a fresh Excel. If you want, you can just copy this. Copy the format. Just copy the format. That's it. This. I'll give you the format as well. This is the format for PNL. Just give you a format over here. This is the format for PNL. This is the format for your balance sheet. This is the funds. This is I'm giving full format. Okay, up to over here. Full. All I've given all the schedules and all. You just have to punch numbers and change things. PNL given. Okay, cash flows. Also the cash flows. Then do this as cash flows. Okay. Giving you the format and giving you numbers over here. This format now you can use it on a fresh Excel. Okay. Start with schedules and then start making your profit and loss accounts. Yeah, I will share this file. I'm giving you homework where what you do is over here. Okay. Let's start with equity raised. Okay. Equity raised. 30 million is the equity that you raised. Okay. 30 million. Out of this 30 million, you purchased PPE of let's say 10 million. Equity raise is 10 million. Then after this, you purchase inventory. Purchase inventory for let's say 5 million. Inventory sold. $4 million. Then obviously, can I say this is your COGS as well? COGS. Writing it over here. Now this 4 million inventory, let us say you went and sold it at 7 million. Your sales was 7 million. Obviously, you have COGS now. COGS will come from this item. Then employee expense. Let us say 100,000. And other expenses 200,000. Okay. Tax rate will be, let's say, 40%. Okay. And do see, these are only assumptions that I've used. Okay. These are the only assumptions. 1, 2, 3, 4, 5, 6, 7, 8. 8 red items. If you see my working capital over here, 1, 2, 3. The dividend is 11. Yeah, sorry. 4. This is just I've given you 4. Then 5, 6, 7, and 8. On these 8 assumptions, I have created my whole balance sheet, P&L, and cash flows. Here also dividend is given. Dividend, let us say, dividend payout is 10%. Okay. Dividend payout is 10%. 9 assumptions. From this 9 assumptions, you have to make your whole balance sheet, P&L, and cash flows. See, it looks difficult, but it is easy, no? See, from just this 8 assumptions, I have made all these items. Everything is linked to each other. Once you know this linkages, modeling will be very easy for you. It will never happen that a balance sheet is not telling. See, valuation is very easy. Valuation is been taught every time. Anyone can teach you valuations. You can even learn it. Just Google it and learn it. But this modeling is a difficult part. Where now this all things, see, this all things cannot be written in books. Even if I write this in a book, you will never understand what I have written. Am I right? That is why financial modeling books are very rare. And even if you read it, you won't understand what they have actually done. Okay. Yeah, I'm sharing this file. We'll share this file with Soumitra. He will. Okay. One second. I will just share it in the chat box only currently, so that this Soumitra send, it will take time. Others can, those who have not got it, they can get it from Soumitra. But I'm sending it in the chat box. 2 minutes. I'm just sharing it in the chat box. You can use this file for reference, but make sure you make it in a fresh Excel. Okay, don't make it in the same Excel. No use then of modeling. Once you have done, send it to Soumitra. Okay, we'll see what the answer. I don't know what is the answer. I want you to know the balancing figure. What is the balancing figure? Yeah, so actually you get it quickly only, and maybe a day's time, in a day's time. Maybe today, maybe Sunday or maybe Monday, you will get it. Okay. I think today only you will get it once I share it with Soumitra. It's there in my PC only. So when I share it, because it takes time to convert, so that is why I wait. Rest all no, we'll get it in a day's time. Okay. Okay, guys. So see you. See you next time. I think our next session will be on Saturday or maybe Sunday next week. Okay. Okay, guys. So see you till then. Follow. Do this. Try making your question. Sorry, try making this, and if you have any question, let me know. Do we have to submit the homework to anyone or just submit to Soumitra? Submit in the group only. Submit to Soumitra, so I will know that who all are serious. See what happens, because you see now what happens with this, that see, you all are here for learning and we are not charging anything from you. That is why if you go outside, financial modeling is 40,000-50,000 course. We are not charging anything. Now those who are not interested, they just come and spam. Right, sir, I don't understand this, I didn't understand that. and they waste the time of others who actually do the homework. So my request is that do their homework. If you are not interested, don't attend the session. Okay, don't waste the time of other people who are actually here to learn, and we are actually here to teach. We are not here for making money or just looting you guys. See, I am an analyst. I have been working in the analyst field for last 8 years. There is no need for me to teach you. I will have spent time. This is what we do. It's for betterment of the future of finance. Okay, you guys are the future of the when you go out for a job, let us say a manager who is working with you, okay, should not face this kind of issues which I face. As a manager, when I used to work with a fresher, they don't used to know all this easy stuff, and the manager cannot teach you this all stuff. Okay, so better when you also go and when you work, and this all things can help you get an interview, get a job. Sorry. It is not for our benefit that we are doing, it's for your benefit. And the people who come spam every time just asking useless questions, so we'll ignore those guys. Okay, they don't do the homework and then still does ask questions, sir ye kyun nahi aaya, sir wo kyun nahi aaya.